Varun. I am investor and businessman. Today we are see to Guinness fund some types. Which types? Uh, 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 the three type of ETF in available in Indian stock market, but I think also but available to global market. But I also know this type of ETF in available to global market. First of all, ETF is a exchange traded fund. Fund means one portfolio uh, that portfolio you can trade live market, that is called to exchange traded fund. This is ETF. ETF three types is main, that the three main type of ETFs we will see now. I share about knowledge that are three ETF. One is index fund ETF. Second is sector based ETF. Third is bond ETF. First is a index ETF. But index ETF mean is but uh, but you know but so many uh, ET but you know so many but index fund available in stock market, that is famous in Nifty 50, Nifty 100, Nifty 150, Nifty mid cap, Nifty small cap. Uh, there's like so many funds is but available, but that uh, that is one kind of mutual fund, that is mutual fund. Same procedure, but you can trade to uh, live market, that is called to ETF. But example, you take Nifty 50 uh, fund, that same Nifty 50 company, because Nifty 50 means but but uh, but Nifty 50 means Indian 15 companies, Indian top 15 company called to Nifty 50 company. That company all bundled give to one ETF, that is called to index ETF. You buy one ETF, that you buy one Nifty 50 ETF, that ETF have to top 50 company in Indian company. You have also trade that ETF, that is called to index ETF. Uh, if you like trading person, uh, if you like a trading person, they like to buy one stock. But example, you buy HDFC stock, that stock that is example, you buy yeah, HDFC stock and another but another stock, any one stock you take, uh, th- that if you buy one by one the stock, that rate is very over, very costly. But you give Nifty top Indian top 50 company one ETFs also very low price, that is benefit to Indian ETF. Sorry, ETF. It is same to which are benefit have a index mutual fund that all benefit have a same this ETF. This difference is you buy mutual fund, you pay to but expense ratio, but in case you buy to index ETF, you can't pay, you not pay but expense ratio. But if you have a mutual fund, you not trade at live market, but if you have a index ETF, you can trade to live market. If you buy after some but expense ratio uh, collected some but expense ratio collected uh, uh, after balance amount credit to your demat account. So this is called to index ETF. Next we will see to sector based ETF. Sector based ETF means stock market, so many sectors in available in stock market, but uh, 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 but examples say IT sector, banking sector, chemical sector, but FMCG sectors, technology sector, real estate, so many sector is available. That so many sector but available. What is the doing is in tech sector based ETF, that sector based ETF is take one sector, but example take IT sector, that full IT stocks, 10 or 15 IT sector fund there is available, that one ETF, that is IT sector ETF. If you take a banking sector ETF, that is have all to only banking sector and financing sector stocks only, but you can invest in that like of ETF. Same example, you take a chemical sector ETF. Uh, this uh, process doing again samely. If you take a chemical sector ETF, you uh, uh, you see inside that ETF full and full 10 or 20 and maximum 30 stock is chemical based stocks. You, but but if you put the money, but example, if you put 1,000 or 2,000 or any one of money you put in that ETF, that ETF is work is that 1,000 or 2,000 rupees as separately part some percentage, 15 or 20 or 30 percentage, some percentage separately, and but invested in how many stock available that ETF, 10 or 15 or how many stock is available, uh, but invested samely that percentage. That is called to sector based ETF. Who will but invest to in this like of sector ETF? Which person like to this sector going futurely very well? This sector futurely perform very well. This sector 2 or 3 years after very well this sector. That's like people should invest to this like of sector ETF. In case you take some example, I say if you like to but if you like to if you would if you like and if you predict to after 2 or 3 year banking sector performance is very well. So you buy a banking stock, but HDFC Bank one stock, ICICI Bank one stock, Access Bank one stock. This like of stocks you can't buy, because if you buy the stocks you have a lot of money, because that stock price is very highly still the date. If you buy that stock you have a more money. That problem have a that problem give a solution to the ETF, because you buy a one ETF, that ETF inside you can see HDFC stock some percentage, Kotak Mahindra stock some percentage, SBI Bank stock some percentage. So that's like several stock available that one ETF. So if you like, if you would like to invest to sector based ETF, if you go to invest to sector based ETF, this is good choice one. After is a bond ETF. Bond ETF means is uh, if you bond ETF means if you like to going to invest to bond investors to bond. But so many people how to buy a bond, how to invest at bond, this process don't know so many people. So that likes us people come and buy one bond ETF. What are working in this bond ETF? You give 100 rupees or 200 rupees any one amount you take, that that amount you give to ETF company. That ETF company after that 100 rupees separately and uh, buy to a several type of bond. One type of corporate type of bond. Second is government type of bond. Third is 100 plus rated bonds. There's so many bonds that is available to one ETF. If you like, invested to bonds market, so uh, 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 if you like to but investor to bond market, you go to purchase one bond. That bond rates is minimum 1 lakh or 2 lakh, minimum 50,000. So this is very high. And if you don't know that process, how to buy a bond, how to um, but analyzes that bond, that process all if you don't know, that is this investment going to very dangerous, have a chance. So if you have some money, you are 100 or 200 rupees, that money give to buy one ETF, bond ETF, that is enough your bond investing. Because ETF make and ETF are process to one fund manager. That fund manager see that fund manager work how to invest this money to bonds. That all information, that all was doing that fund manager who uh, invested this bond market. Some people like to I my money is very safely. At the time I am generated some money, some profit compared to bank interest and fixed interest be above. That likes of people invested to that bond, because bond is a stable market. Bond is also very low risk. So if you invested to bond ETF, you profit, and you generated money to uh, more than your fixed deposit and saving interest, fixed deposit interest and saving deposit interest above you land to bond ETF. So if you like to go, but if you like to my money is have a safe, I am generated small level of money. That's like people you go into invest to bond ETF. It is very one of the choice. Thank you. Thank you. Thanks for watching. Thank you.